Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB. I'm Andrew Gagan. Thanks for joining us here at AusBiz's Wrap Up the Day and the Week. And all said and done, given the chaos we're seeing globally at the moment, we've actually done well for the week. Just taking a look, in fact, where we're likely to finish up, probably down around 0.25% on the S&P ASX 200, similar amount there we're seeing on the CBO 200. And for the week, that means we've gained around 0.9%. So not a bad outcome when you consider what is going on at the moment, and particularly gripped by that uncertainty on markets, given the news flow out of the Middle East. Well, let's get to the themes of the day then, and I mentioned where we're likely to end up for the week, and it is a weekly win, but there is no end in sight to the end of the conflict there, despite what we may be hearing from the White House, with Iran obviously countering everything that seems to emanate from the White House, as I mentioned there. And fuel crisis. Well, are we in a fuel crisis or not here in Australia? Obviously, given those prices continue to rise and the government is under pressure to help alleviate that, perhaps in the form of cutting the fuel excise. That's certainly been put forward by the opposition. That has been shot down by many economists, saying that's only going to contribute to the crisis, encourage more fuel buying. But apparently the government is potentially considering that. But also a question of just how many days we have left if there is no end in sight to resolution of this crisis, and particularly if the Strait of Hormuz remains closed. Let's get to the sectors of the day then, those that have moved. One day we're up, one day we're down. This is just how the market's working at the moment, given, I say, just in terms of that news flow we're seeing out of the Middle East. So tech, just a little mix there. NextDC has certainly been pummeled today, down more than 7.5%. WiseTech also, looked pretty flat, to be honest. So that was a mixed sector. Elsewhere, gold, mostly in the red, although Newmont are bucking the trend there, but has been a tale of woe in the gold sector ever since the conflict began almost 4 weeks ago. Whereas energy stocks, mostly in the green, clearly, given how they're benefiting from those rising fuel prices. Let's get to the top stories of the day then. Rio Tinto spent a record amount of $19.7 billion in Australian supplies in 2025. BlueScope Steel, it's stepping up efforts to extract value from its 1,200 hectare surplus land portfolio. Xero has signed a deal with AI firm Anthropic. Endeavour, well, it hit a record low early in the session as Citi downgrades it to neutral on inflation concerns. Elsewhere, Silex Systems licensee Global Laser Enrichment has locked in a nearly $100 million in government incentives. Weebit Nano has slumped on discounted placement. 4D Medical has hit a record high as on an EU nod and a premium placement there. And KMD Brands has requested a voluntary suspension on the ASX as it works to finalise the capital raising and debt refinancing. It was due to report Wednesday, delayed that to Thursday, and then today, and now it's delayed it again. So let's get across what we've seen this week. Plenty to watch, of course, particularly as the war is impacting global economic growth. We're joined by Mi Bui from AMP. Mi, great to have you back on the show. So, where are we at? It's difficult to know, isn't it? Because it's all about uncertainty at the moment. As an economist, how do you do the modelling?
Oh, it's actually been terrible for us because I feel like, every morning you wake up, you try to check Truth Social to see if there's any more updates to see whether you actually have to revise our forecast. And sadly, this week, we've actually had to revise up our inflation forecast for Australia. It's very likely that we're going to see a 4.3% inflation print for Q1 and a 5.3% inflation print for Q2 for Australia. Meanwhile, we've actually downgraded our GDP forecast for the country to just around 1.6 to 1.8% by the end of the year, which is quite a dramatic decline from the current pace of 2.6%. So not a very good news week for economists, I think. But I think if I take a step back, I feel like I've seen this film before with this week. This morning, for example, Trump just said that Iran is begging to make a deal with the US. And it seems very familiar because actually just 9 months ago, he said something very similar, which is China is really desperate to make a deal with us. So it does seem like we've seen this film before. Like all the clues still say to us that, yes, maybe this thing will pass. The only question is, when will it pass? And earlier this week, the International Energy Agency also told us that even if the Strait of Hormuz is opened at the moment, it will take months, up to 6 months, for global oil and gas supply to actually resume to the normal level, given the extensive damage and hit to the energy facilities in the region. So I think the big picture still stays the same for us. We still seek scope for shares and for the economy and for markets to improve towards the end of the year. The only issue with that is before we get there, I think things would get worse before it gets better.
Well, yeah, on that note, obviously, perhaps Donald Trump looking for an off ramp. It's a question of how that comes to pass, given essentially the Iranians seem to be rebuffing any of the suggestions they put forward as far as their 15-point plan is concerned. But clearly the president is facing pressure both internationally, but of course domestically as well, as they are very conscious of the midterms coming up towards the end of the year. And you take a look at his approval ratings, which is essentially an inverse correlation with gas prices at the States at the moment. In fact, I think we've got a chart that illustrates this.
Yeah, I think it's quite remarkable that around this time in Trump 1.0, so basically like more than a year into the term, Trump's tends or presidents tend to see a little bit of a rebound in approval ratings because most presidents are aware of the fact that they have to go into the midterms election by the end of this year, around November. So they tend to issue policies that kind of stimulate the economy a little bit to make people feel better. But now, with gasoline prices spiking, even in the US, which basically has a lot of energy independence, people see that people don't like it. And Trump's approval rating has actually reached to the lowest point in his second term this time around, which is, I think that's quite remarkable. So there's no rebound here. And another indicator that we like to look at is basically the probability priced in by the betting markets, which have been very accurate with the previous presidential election when Trump won. The betting markets are basically saying that there's a very high chance that the House would go to the Democrats this midterms election, and even Senate earlier this year, the probability of the Democrats taking the Senate was only around 35%. Now that has spiked up to even above 50% this year. And remember that the Republicans basically have a razor thin margin in the Senate, in the upper house. So it is very well conceivable that if the war keeps going on, the Democrats would take the Senate as well. I'm not sure if that's a good or bad thing for America, but it does mean that there will be a lot more policy uncertainty for the markets, and markets tend not to like that when you have, a split president and the Congress belongs to the opposition party.
Yeah.
So again, it does seem like things would probably get a bit more volatile before it gets better.
Well, that potentially leaves a lame duck president, doesn't it? And that would clearly infuriate Donald Trump. So, let's come back home then, see how this is obviously playing into the Australian economy, in particular those rising fuel prices. Now, of course, we did have that read on inflation earlier in the week, but this was a measure taken prior to the outbreak of the conflict. So, bearing that in mind, and that did come off a little, but where we're at right now, how do you see those fuel prices feeding into inflation?
So before all this war happens, inflation was already not very good news. Yes, you mentioned that this week we saw a bit of a downtick in terms of the pace in monthly trimmed mean inflation, but headline inflation is still at 3.7% and trimmed mean inflation is still at 3.3%, which basically means that it's way above that 2.5% target for the RBA. And you still see a lot of pressures in terms of different services, such as health services, as well as education prices this year. That would take quite a while to come out of the inflation readings. Now, in terms of fuel prices, there are two impacts here. The first is the first round impacts to the petrol price at the pumps that everyone would see every single day. And right now, petrol prices have already gone up by about 40 to 45% compared to February 27th, which was before the war broke out. That means that would add directly at about 1.2 percentage point to the annual inflation numbers. Again, that means we're going to see a 5 in front of the headline inflation reading. But that's not all. We do think that there would be more secondary round impacts to inflation. For example, fertilizer prices have gone up around the world. That would add to the prices of food and grocery bills around the world, including in Australia. Commodity prices would feed into other services as well. And there's a funny story here. This morning, I actually got a notification from my strata manager that the gardeners have put up their prices to come in and mow the lawn in our apartment building. And they explained this because of a fuel surcharge, because it's more higher input for them. It doesn't really make a lot of sense to us, but this is what's happening around Australia right now, that businesses are actually putting up services prices because of an increase in prices in goods.
Do you think we're going to hear that more often? Sorry, Mia, I was just going to say, do you think the fuel surcharge cost, do you think more and more businesses are going to be quoting that?
Yeah, definitely. I think this week we've also had an update in terms of the PMI numbers. So that's a survey to businesses, and we've seen a massive uptick in input costs, but output costs haven't really gone up as high. So that means that we'll definitely see that secondary round impacts in the next coming months, and that will play out throughout the next 3 to 6 months or so. There have been a lot of headlines about these fuel surcharge, and I think the reason why businesses can do it is because we are actually starting from a relatively strong footing. Businesses would not pass on all the prices if the consumers are already weak, but the issue is that consumers have been spending throughout the second half of 2025. So I do think that, businesses now feel like, oh, they may be able to do that, to pass on all the costs to consumers. So that's why we do expect to see this little bit of stickiness in services inflation over the next coming months.
Now, we just did flash up that consumer survey there. How conscious, we might bring that up again, just how conscious the RBA will be about, in this current environment, obviously rising inflation, but at the same time, consumer spending is going to come back as we adjust to those prices and try and rein in our spending. How are they going to factor all that in when they make their next decision, do you think?
So it's quite interesting that this week we've actually had a bit of an update from the RBA with Chris Kent, which is the assistant governor's speech. And he mentioned a lot about inflation expectations, as well as some impacts from, the news around the war in Iran. I find it quite interesting that the RBA haven't really mentioned consumer confidence a lot lately, even though they've really nosedived into really negative territory. They've actually been more focused on inflation expectations, because they think that, when people think that there's high inflation, that feeds into actual prices, because they would ask for higher wages, because businesses would put up prices, as we've just mentioned. And Chris Kent mentioned a lot about this, and they basically say that they want to be careful that, they don't want to see inflation expectations rise up further. So I feel like that poses a little bit of a conundrum for the RBA here. Yes, we know that spending would lower a little bit, but consumers still expect that prices would be put up. So that actually forces the RBA to be a little bit more hawkish. I would still categorize the RBA as quite hawkish, and we do expect to see one more rate hike in the upcoming May meeting.
Let me put you on the spot. Best case, worst case scenario, where are you sitting at the moment as far as the war is concerned and the impact it's going to have?
I think our best case scenario, which is still our base case, is that the conflict would get resolved somewhat, or Donald Trump would find an off-ramp before the Trump and Xi Jinping meeting, and that's scheduled for April the 16th. So that's still our base case. I think I would ascribe around a 50 to 55% probability to this. But obviously, I think if Iran continues to, not let the Strait of Hormuz go through, not let ships go through, I think there's definitely a higher chance of a recession. And I would say that the probability of a recession in terms of a prolonged conflict in Australia is probably around 30%, which has definitely gone up since last year.
All right, I'll take you as an optimist, which is not a bad way to finish a Friday. Great to catch up. Thanks for joining us on AMP.
Thank you.
Now, let's get to our stock of the day. It was Weebit Nano, which has completed an $80 million institutional placement, raising funds to accelerate its ReRAM semiconductor technology. Let's get the view of our experts, Luke Winchester from Merewether Capital and Dean Fergie from Scion Asset Management.
I was very cynical because they had, $80 million in the bank. They had a runway of at least 2.5 years in terms of cash funding. And they've come back to the market for somewhere between 87 and over $100 million if you count in the SPP. And my cynical view, you can argue if it's correct or not, is that if you're raising that much money and you've currently got a lot of money in the bank, are you saying the shares are undervalued or overvalued? And my view is they're saying they're overvalued.
At the end of the day, investing is a game of pattern recognition, and you build that up over time as an investor. And if you've been around in micro and small caps for 10, 15 years, we've seen sort of this sort of scenario play out a handful of times, which is speculative tech attacking, no doubt, a huge industry. Very difficult for your average investor. You alluded to it in the intro. Very difficult for your average investor to actually get a feel for what the technology does, how it compares to peers, and so the valuation just naturally, goes to extremes and well beyond sort of any fundamentals.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAM, retirement income done differently.
Let's get to the best and worst in today's trade then, beginning with those leading. Treasury Wine Estate making a good comeback there. It's up more than 8%. Also those coal miners led by New Hope. Sold Pats off the back of its updated results yesterday. Telix and Whitehaven, another coal stock there. Those that have fallen. Drone Shield, that has certainly been volatile. Spent the last couple of sessions rising dramatically. Now seen some profit taking on there off 13%. Predictive Discovery, certainly in the gold space there, that has been hit hard among the broader gold sector. NextDC, as I mentioned a little earlier there, among the tech stocks that have fallen today with Codan and Pinnacle Investment. Now, tonight we're going to get UK retail sales. Also, University of Michigan consumer sentiment. It's going to be interesting just to see how that is tracking after almost 4 weeks of war, and how the American consumer is feeling about life at the moment. You would think, particularly as it affects the economy. Now, next week, internationally at least, Fed Chair Jerome Powell speaking on Tuesday. We also get flash CPI estimates out of the EU. Job openings out of the States on Wednesday, as well as retail sales and jobs numbers on Friday for the US. So this is where we're finishing up for this Friday. We're finishing down, as the case may be, 0.25%. Certainly not as bad as anticipated at the beginning of trade, given the very hefty falls we saw on Wall Street. And for the week, it looks as though we're going to finish up around 0.9% higher, both in the CBO and the S&P ASX 200. That is the COB. We'll get right across all the international news and, of course, what's happening locally as well when we get underway again on Monday morning. In the meantime, have a great weekend. Thanks for watching.